Alright guys, welcome back to AWFX. Good morning, good afternoon, good evening, or good night, no matter where you are. Hopefully you guys out there are doing great, earning a lot of money from the market. And of course, I wish you guys out there have a healthy life. Alright, so first of all, some of you guys already know that I'm giving away free ebook for you to download through the Google Drive. And just going through how it's supposed to be. All right, first of all, you guys can read through it. And there is my YouTube channel, official YouTube channel, my Facebook, and my Instagram. Guys can follow it if you wanted to know more about trading Forex or trading crypto. Okay, now, second is that I'm already separate into a brief introduction about trading, right? Strategy of QML. Then you can read it through and you can actually watch some of the videos linked back to my YouTube channel. All right, so that will be it. Just go through it. Hopefully, it will help you guys watch my videos easily. All right, so now coming back into trading, I would like to share with you something very, very important. So most of you guys have been fail, all right, have been a failure in trading because you do not know how to read structure, right? So of course, this is a GBP USD. I'm showing you an example right here. Last week there was an NFP, the price just goes up, all right? So first of all, market structure is extremely important, right? It's extremely important. You need to know, or you need to learn how to read what is the trend, because the trend is forever the king of whatever method you are trying to trade, either indicators, technicals, or price action. Okay, so first of all, if you're able to notice that the price actually has been going uptrend in the GBP, all right, and there is a very heavy this one called the pullbacks right there, and a lot of people have that kind of greed or mentality, saying that this is the sign of the reversal. We in our mentorship, we don't teach these kind of things. We will always tell you follow the trend no matter what happens. All right, no matter how big the pullback is, follow the trend first, unless that is a sign that it started to break the trend, and that was where we will start to sell. Right, you can actually sell, no problem, but just that you need to be careful where is the important high and the low. All right, right here, just for a brief introduction, just let you guys know, this is the important high and low part for these pullbacks. All right, means that the price must break the low right here for it to goes down. So coincidentally, if you guys know what is a supply and demand, you can use it very well, because at the end of the before the end of the support area, there is a very nice demand, daily demand. It's not normal demand, it's a daily demand. And this daily demand push the price goes up very high. So it means that there is a lot of strength in this daily demand. And if we go further down into small time frame, you can actually notice there is a possible QML right there. There is a possible QML, right? Still cannot see, no problem. Go even further down, right? You must know all these patterns. All right, in our mentorship, we taught about all these QML patterns. All right, let me show it to you. It may not look perfect, but nevertheless, this is a QML that break the structure at a smaller time frame right there. Right, meaning that it has a strength to push the price to higher level. All right, so from there, how do you able to go about trading? You have your structure on the higher time frame, the trend. Then you have these patterns of setup. Then of course we mark out the zone. We must mark out the zone. We must know how to mark our zones out. All right, from the highest to the lowest. Then what happens is that you wait for the price to comes back into the area. All right, so when the price came back into the area, look out for the change, or should I say the break of structure, which is right there. Okay, the break of structure. Okay, then you trade based on, if you wanted to trade based on the bottom right there, we have another strategy based on that. If not, you can actually trade based on the zone that push the price through, right? and you're able to catch this movement, right? So how far will this movement go? At this moment, I cannot answer you because I don't hold a crystal ball. But what I can see is that there is a possible few danger zone based on the H4. First is right here, right? This has not happened. You can go ahead and monitor it. First is right there. This is the first danger zone. Then after that, I have my danger zone above here based on a few things. First is based on the possible fakeouts right there, based on possible fakeouts. Second, this is based on the support become resistance setup. So if you look at it, this is a very, very simple way, a very easy and a mechanical way or engineering way that we just catch maybe 1 to 3.7 or 1 to 6, right? We want to make trading as if it's a system. It's not by emotional, right? Everything is through uh, some sort of checklist. Go through it step by step, right? That is how you're supposed to trade. All right. A lot of people know a lot of technicals, know a lot of indicators, but the problem is that the discipline and the emotional control, all right, the psychological part is the worst of all. Most of them they have no control over it. That's why they know how to trade but still lose money. All right, so hopefully you guys learn something valuable and it will help you out. You can see that the price reacted with the zone very well on the during the NFP. All right, during the NFP, and then push up. Right, push up quite high. So all these things is true technical, right? And if you ask me, will it go far? Yes, there is a possibility. The price might give you some sort of pullbacks right here or rejection all the way down. But does it matter? No. As long we're able to catch our entry at a small time frame, you can imagine a daily movement and we just goes up until H1 or M30 to catch that entry. So will it gonna give you a big risk reward ratio? It depends on you. To me, 1 to 4, 1 to 5 risk reward ratio is actually very, very simple. But to a lot of people, 1 to 2, even 1 to 2 risk reward ratio is like a dream. All right, so that's all for now. If you guys are interested to join me for the mentorship, click the link at the description, contact my assistants, and yeah, I'm going to see you guys next time. Bye.